What if I told you that right now, while most investors are chasing big names in technology and large pharmaceutical companies, there are small medical device companies trading under $0.40 that almost everyone is ignoring, but that could quietly deliver massive gains over the next few years? Today, we're talking about the top penny stocks under $0.40 to watch in 2026, specifically in the medical devices sector. These aren't random lottery tickets. These are real companies with innovative products, clinical validation, and actual customers. They operate in one of the fastest growing areas of healthcare, and the upside could be extraordinary if you position yourself correctly. The medical devices sector is booming for several reasons. The global population is aging, healthcare spending is rising, and technology is enabling treatments that were impossible just a few years ago. Hospitals and healthcare providers are seeking new solutions to improve patient outcomes, reduce complications, and lower overall costs. Meanwhile, patients demand less invasive procedures, faster recovery times, and better overall results. This combination of needs is creating a surge in demand for medical technology innovation. And while large corporations dominate the headlines, smaller companies often develop breakthrough innovations. In trading under $0.40, they can offer huge potential gains for early investors. Let's dive into the first company on our watch list. 1. Advanced implantable medical devices at $0.38. The first company focuses on implantable devices and biosensors that address critical unmet medical needs. Unlike companies that make small improvements on existing technology, this business is building its own innovative platform to help doctors monitor and treat serious conditions. Their devices are designed to improve patient outcomes and make treatments safer and more effective. Here are the key points about this company. Proprietary technology, not just copycat products. Revenue from device sales, licensing, and partnerships. Strong relationships with hospitals and medical institutions. The company is investing heavily in research and development and approaching profitability as adoption increases. Why this company is interesting. The price is under $0.40, meaning investors can accumulate a meaningful position without deploying huge amounts of capital. If their devices achieve broader adoption or receive regulatory approvals, even modest revenue growth could translate into significant stock appreciation. This is exactly the type of penny stock that can move dramatically as market recognition grows. The company's implantable devices use cutting-edge technology to monitor patient conditions from inside the body. These devices provide continuous data, which can alert doctors to early signs of complications or disease progression. Hospitals and clinics value this because it helps reduce patient risk and potentially lowers treatment costs. Additionally, the company's biosensors are being integrated into clinical trials and partnerships with larger medical device firms. This generates revenue from both sales and licensing agreements, while validating the technology in real-world settings. 2. Minimally invasive surgical devices at $0.39. The second company focuses on surgical tools and instruments for minimally invasive procedures. Surgeons increasingly prefer tools that reduce patient trauma, speed up recovery, and improve precision. This company designs devices that enhance the surgical process, making operations safer and more efficient. Their devices are used worldwide, generating recurring revenue from replacements. They're also expanding their product portfolio to new surgical specialties. The company maintains healthy margins and positive cash flow while building strong relationships with surgeons and hospitals. Trading under $0.40 provides potential for substantial upside. Minimally invasive procedures are becoming the standard in many hospitals globally. Hospitals invest heavily in these capabilities because they reduce complications and shorten hospital stays, saving money and improving patient satisfaction. When a company is positioned in this growing segment, early investors have the chance to benefit from rapid adoption and market expansion. This company carefully studies surgeon workflows to design devices that improve outcomes and are preferred by medical professionals. Recurring revenue comes from both initial device sales and repeat orders such as replacement instruments or consumables. The company's focus on quality and precision gives it a competitive advantage, as surgeons often stick with tools they trust. Growth is supported by expanding into multiple surgical specialties, increasing their addressable market. As global adoption of minimally invasive surgery accelerates, this company could see consistent revenue growth. That makes this penny stock attractive for patient long-term investors. 3. Diagnostic and monitoring devices at $0.37. The third company develops innovative diagnostic tools, sensors, and remote monitoring solutions. Early disease detection and personalized treatment are increasingly critical in healthcare. This company is creating devices that help detect diseases earlier, track patient health remotely, and provide actionable data to doctors. The company has proprietary sensor technology and sells to hospitals, laboratories, and clinics. Revenue comes from device sales, testing services, and licensing. It is focused on precision medicine and home diagnostics while trading under $0.40 with strong growth potential. This company benefits from several trends. Hospitals and clinics want faster and more accurate diagnostics. Patients prefer convenient and less invasive tests. Remote monitoring and home testing are becoming more common. Personalized medicine drives demand for precise data about patient conditions. These devices collect real-time data on patient health and allow doctors to make better, faster decisions. Proprietary technology means that their sensors are more accurate and less invasive than older methods. Hospitals and labs value this technology because it improves efficiency and outcomes. The company is scaling production while expanding its device portfolio. As adoption grows, these diagnostic tools could become essential in healthcare facilities, increasing the stock's long-term value. Right now, the medical device industry is at an inflection point. Several factors make it a perfect environment for growth. Aging global population means more patients needing care, while healthcare spending continues to rise. Breakthroughs in biomedical engineering and material science are driving innovation. Hospitals are investing in advanced medical technology. There is a growing preference for minimally invasive surgery and home monitoring solutions. As these companies demonstrate strong growth, adoption, and clinical validation, institutional investors and large corporations may take notice. Increased demand and potential acquisitions could push stock prices up rapidly. Many investors have profited significantly by spotting undervalued medical device companies before larger players acquired them. However, penny stocks are high-risk investments. Regulatory approvals can be slow or uncertain, and clinical trials can fail. Competition is intense, and manufacturing or supply chain problems can delay revenue. Always research the technology and its clinical value. Review financial reports and balance sheets before investing. Check partnerships, patents, and management expertise. Only invest money you can afford to lose. This is not financial advice, but educational content to highlight opportunities. Viewers should independently verify prices, company status, and market conditions. Why these stocks are compelling. All three companies share characteristics that make them stand out. They are positioned in the growing medical device sector. They have real technology with clinical validation, actual revenue, and customer adoption. Their undervalued prices under $0.40 create room for upside. They also have potential for explosive growth with adoption, partnerships, or acquisitions. Even small adoption gains in their products can create outsized stock returns, which is why they are included in this 2026 penny stock watch list. How to monitor prices. Since penny stocks can fluctuate daily, it's important to use a trusted platform like Yahoo Finance, MarketWatch, or NASDAQ. Check the last traded price before making any decision. Compare historical trends and volume. Look for news on device approvals or partnerships. This ensures viewers know the price is dynamic, and they are looking at real-time market data. These three medical device penny stocks under $0.40 offer an opportunity to position early in a fast-growing sector. Implantable devices, minimally invasive surgery tools, and diagnostic sensors are all aligned with long-term healthcare trends. The combination of clinical validation, real adoption, and low current prices makes them compelling for investors willing to research and monitor. Remember, this is a high-risk space, and gains are never guaranteed. Do your research, follow the companies, and understand the market dynamics. If you want more updates on hidden penny stocks and medical devices, subscribe to the channel. Comment below which company you find most interesting and why. Implantable devices, surgical tools, or diagnostics. I'd love to hear your thoughts on the future of medical innovation. Tell us which trends you see as game changers in healthcare.